All right, welcome back from the break. Okay, so just a general breakdown. What we're going to do is I will bring you through a revision of strategy X all the way until around 1:45. Okay, that will take half an hour. After that, I will give you a short break. Okay, then Joe, he's back from his back treatment. Okay, so he will come in to give you a feedback as well as answer your questions on the fried snake. And then don't forget, we actually have a bonus stock analysis right at the very end. Okay, right. So okay, so right now let's just go straight into the buying strategy X. All right. Okay. So so just now what we went through was we went through. Wait, I didn't share screen. Sorry, my bad. Okay. Okay. So just now what we went through was we went through how you can actually sell a put. Okay. Wait, did I record? Yes, I did. Okay. Sell a put. Okay, in order to promise to buy 100 stocks. Okay. In this case, because your commitment is 100 stocks, make sure that it is really a power stock. Okay. And one of the power stock or ETF that I shared earlier was SPYG. Okay. So once this is done, remember that what we talked about also, that when you sell the puts, don't let the premiums go to waste. Okay. If you really believe in the stock or ETF, then you can also reinvest the premiums to get the stock or ETF straight away, so that you never come into a scenario where you don't get to own it. Okay. And after, okay, let's say after you get assigned, you get 100 stocks already. What you can then do is you can promise to sell it off at the higher price. Okay, so we went through two scenarios. One of it is the more aggressive one, where you just promise to sell it just above the current market price, but make sure it's always above your purchase price. Okay, for that you get more premiums. Once again, if you do that, remember to reinvest the premiums, so that if you were to end up selling off your 100 shares, okay, you still have some shares to hold on to. Okay, the other way was the more conservative one, where you actually set to sell at a higher price. Okay, where you have lower chances of it getting sold. Okay, but in that case, you get less premiums and therefore you won't get to reinvest. Okay, so different people will prefer different things. Okay, so the most important thing is to consider all various scenarios. Okay, and be very comfortable with your risk and your reward before you enter whatever position. Okay, so now moving on to strategy X. Okay, so sell put and sell call. Okay, the equivalent is actually strategy X and strategy X plus. Okay, so some of you were very confused. Hey, when I sell, what is the difference between BOSS sell call and strategy X plus? Okay, very simple. BOSS sell call, or what we call, okay, over here, this is what we call the covered call. Okay, is that you are covering your call, okay, with 100 stocks. 100 stocks. Okay, so don't get confused. This one, you need to make sure that your sell put is already exercised. You have 100 stocks, okay, to cover this covered call 100 stocks. Okay, so let me just put this in, okay, for the benefit of those people who are a bit more new. Okay, and this is after your sell put gets already exercised. Okay, the other one, this one, okay, this strategy X plus, okay, it is actually, in a way, you are not really covered, but you are covered, okay, by the buy call. Okay, and this is slightly more complicated in terms of its mechanics and as well as how to calculate the profit loss. So for today, we will not go through strategy X plus, okay, but we will go through strategy X, because I think this is one very important way if you want to grow your portfolio exponentially. Okay, so let's let's go to that. Okay. Okay, for strategy X, just want to review some of the things that have been gone through during OMI, and also some things that I want to emphasize on based on what you have already learned from foundation. Okay, so remember that when you do a strategy X, you are actually buying the contract of the equivalent stocks. Okay, so let me just put in the definition. What you're doing here is you are, okay, buying, okay, right now you're buying a right, okay, to own 100 stocks at an agreed strike price. Okay, so once again, this is for the benefit of those people who are a bit newer. Okay, so I hope that you can see my video. Okay, so okay, assuming that this, for example, okay, I don't know whether this is an good example to use. Okay, maybe I use this one. Okay, this, let's say, okay, are my stocks. Okay, this is a stock. So let's say I'm interested right now. Of course, on my watch list, who do I have? I have TSM lah. Okay, so let's say this is TSM. Okay, and this is the underlying contract. Okay, so what I can choose to do when TSM has come to a good valuation, I can choose to do two things. Okay, number one, I can choose to buy the stock. Okay, so for example, if I think that TSM has come down to a good valuation, okay, I can choose to buy the stock. If TSM price goes up, okay, I will earn a profit. Okay, Now, but then I can also choose to buy the underlying contract. This one, so I can buy the right to own 100 stocks of TSM at an agreed strike price. Okay, so now let's do a bit of recap. Now, when TSM price goes up, right? Okay, what do you think will happen to the value of these underlying contract? What do you think? Do you think the value will go up, remain neutral, go down? What do you think? Okay, it will. Okay, it will actually go up. It will actually go up. Okay, so this is one very important reason why people actually go into buying of calls. Okay, is because it actually costs a lot less. Okay, so if I want to own 100 TSM stocks right now, let's look at the price. If I want to own 100 TSM stocks right now, okay, let's look at the price. Wait, reload. Okay, let's go to trade and I go to TSM. Okay. All right. Okay, so can you all type it in? If I want to own 100 stocks of TSM right now, how much do I need? Can you all type in? 12152. Okay. So okay, right now, okay, to do this strategy X, I'm also going to go into something a bit more advanced, which is actually the risk graph. Okay. So what I want to show you is, can you see I have the analyze tab here. Okay, this is something that you can do for yourself also, and this works best on this old school TOS platform. Okay, so I go to analyze. Okay, and what I can do is I can actually add simulated trades to analyze. Okay, so now let's talk about a few scenarios. Okay, number one, okay, I want to analyze the buy trade. So what I can do is I can choose to buy 100 stocks of TSM, right? Okay, now and this will cost me 12126. Okay, like what, like 12126. Okay, based on, I don't know why it's 12126, but around there lah. Okay, 12152. Okay, like maybe based on what you all put 52. Okay, I can choose to pay this price. Okay, now the second thing is that what I can do is, instead of spending $12,000, which may be totally out of my portfolio size, okay, which is also the reason why many people cannot do the self put on TSM, is that I can buy the underlying contract. Okay, so what are some conditions? Number one, remember that the underlying contract, okay, the value of the underlying contract moves in accordance to the underlying stock. Okay, so if you are going to do a buy call or strategy X on a lousy stock, guess what? Okay, your buy call contract is also going to lose. Okay, so make sure that you're doing this on something that has already passed Fright Snake. It's one of your power stocks. Okay, so second condition, the buy call contract can only appreciate in value if the stock price moves up. Okay, so it doesn't make sense for you to enter when the stock is currently overvalued. If the stock price is overvalued, there is no reason why it will move up some more. Then your strategy X will not gain value. Okay, I hope this makes sense. So make sure you are buying when it's undervalued or at least at the support level. Okay. Now next thing is make sure that, okay, the market is currently bullish about it, because when you buy the contract, when you buy this contract, it has a time value to it. Okay, so every day that you do not close, you are losing value. So you need, when you do a buy call, you must make sure that you are confident that the stock price must move, because if it does not move, you're going to experience time decay. Later on, we will show this as well. Okay. And okay, so to optimize things, it will be great if you can execute this when it is of low volatility, because once again, this means that the premiums that you pay will be a lot less. Okay, later on we will compare the two. All right. Okay, so what's your objective? You are buying a call because you want, okay, you believe that the stock price will go up. That's the only reason why you buy the call. Okay, and of course, if you have done your fundamental research on it, then you have a very, very strong reason as to why you think this share price will go up. Okay, and how do you get profits is when you close the position. Okay, so entry setup, enter when stock is undervalued, okay, or if it's at a suitable support level. Okay, buy the call. Okay, again, this one is based on the most optimized scenarios. Okay, I know that some of you buy out of the money calls, you choose other strike prices. Okay, but for this foundation course, we go with the one that is the most straightforward. Okay, so that we actually can gain a common understanding here. Okay, we will buy the one that is minus one strike of the current price. Very simple. Why? Because when you buy the right to own 100 stocks, of course you want to buy the right, okay, to buy the stocks at a lower strike price. Correct? Okay. Make sure it's more than 365 days. Okay, because if you do less than that, you are going to pay quite a lot to time decay. Okay, as the time goes on. Okay. So just to share with you, I just go into this graph very quickly. I think you should have been shown this during OMI already. you can see that, okay, if you take a very, very short-term contract, for example, let's say you take a 30 days contract, okay, even if the stock price were to go up very, very fast, you are fighting, okay, you are actually losing your profits to time decay. Okay, same thing goes for a 60 days contract, same for 90 days, same for 120 days, okay? So what we want to do is we want to give ourselves enough time, okay, for the stock price to go up before 120 days. Okay, so some people ask, hey, can I take a 150-day contract? Okay, or can I take a 170-day contract? As long as above 120 days can already, ma. Okay, but I want to show you once again that the stock market is a very volatile place. Okay, so if you take 150-day contract, are you saying that nothing is going to happen to the stock market, okay, within this 30 days before the 120 days? So you can see typically there are retracements happening, okay, almost every month. Okay, so you do not want to put yourself in that kind of scenario. Okay, so to give yourself more time, okay, you please go and do something more than 365 days. In fact, Joe and I and some of the senior mentees will know, we actually in fact we actually go for the longest one, 700 plus days. Why? Because we want as much time as possible to be correct, okay, and we want to be able to, for the share price to go up, okay, to our exit price before it hits 120 day mark when we have to close it. Okay, Agnes, I'll answer your question right now. Okay, so over here, let's go back to my portfolio. Okay, let's go back to my portfolio. Now remember that for TSM, let's say I'm working with a 100K portfolio. Okay, so let's say 10K, 10K represents 10% of my portfolio. Okay, and my strategy, actually, I wanted to enter in tranches, right? I wanted to enter 112, 102, 83. Okay, so right now, although yes, I can enter a sell put, but then this would bust my portfolio allocation. Okay, so what is it? What else can I do? Okay, so looking at the technicals, okay, looking at technicals, can you see that TSM has actually come down to one of my price levels? Okay, actually, this is above my valuation of what I want to get of the stock, but at least it has retraced to my cautious level. Okay, are you able to see this? If you are able to see this, type yes. Okay, so very importantly, I want to, okay, so right now I'm conscious that it's a little bit overvalued, but still I believe that because it has come down to the support level, I believe that it will still go up somehow. Okay, so I can actually play around with my portfolio, okay, by actually allocating less of my portfolio to this, and what I do is I can do a buy call. Okay, so now it has come down to a good level, 122. Okay, so what I can do is anyway, not so good level it's actually a little bit overvalued actually to our comfort. Okay, but it has come down to the support level, and we believe it may recover. Okay, so right now there are a few things I can do. I can choose to buy 100 stocks, okay, which I've already entered here, or I can actually go and do strategy X. Okay, so let's go step by step. Strategy X. Okay, I've already done my fried snake on TSM, super good, 8 point something. Okay, in terms of score, okay, even though it's not undervalued, I must take the risk. I know that, but it's already at a certain support level. Okay, bullish trend intact. Let's check. Okay, what do y'all think? Do y'all think the bullish trend is intact? Yes or no? Okay, yes, so you can see the green above the orange, above the red. Okay, so on the 5-year chart, bullish trend is intact. Okay, on a shorter term, let's look at the 1 year. Okay, this is one of the irritating things about free software. Okay, so going back to the 1-year chart, let's take a look. Okay, sorry. Sorry, that was the 1-year chart. So 1-year chart, you can see bullish, even though with the retracement, you can see that the bullish trend is intact, right? You can see the 20 EMA is above the 50 EMA, which is above the 200 EMA. Okay, so which is bullish. On the 5-year trend, you can see is also bullish. Okay, so this means that in the short term, people are bullish, which will be beneficial if I do strategy X, because for strategy X, I need it to go up. Okay, within a short period of time. If not, I'm going to lose money based on time. Okay. Okay, IV, where do I check this? Okay, so what I do is I will have to go to trade. Okay, go to today's option statistics. Okay, click on that. Okay, and what do you see in terms of the IV? Can you all tell me? Kingbu, you are not promising anything. Okay, so you don't have to own anything to do strategy X. But of course, you need to have the capital lah. Okay, IB is 41%. Okay, what does this actually mean? Okay, so let me just show you what this actually means. If I'm able to add this. Volatility. Okay. Okay, I know the color is not fantastic. Okay, but let me see whether I can change the color. Then you can see this a bit more clearly. Okay, let me use a dark blue. Okay, wasn't changing. Okay, sorry. Okay. Okay. Okay, so what does 41% mean? Okay, so okay, this percentage, right, IV percentile, okay, tells you where the IV is at, okay, based on the highest and lowest absolute volatility of the stock. Okay, so the 41% mark for every stock is going to be different. Okay, so for TSM, okay, you can see that the lowest point that it went, okay, was around, you can see 0.09. Okay, the highest point that it went in terms of its absolute volatility is upon 1.03. Okay, so right now at the 0.5 mark, it is relatively at the 41% mark. Okay, now why is this important when we buy a call? Is because when we buy a call, we are paying a premium based on the volatility. Okay, so the higher the volatility, the more premium we pay. So for example, if I were to enter TSM somewhere around here, okay, for the same contract, I'll be paying more for the contract than, for example, if I were to have bought the call here. Okay, does everybody understand what I'm saying? If that's okay, can you type yes? Okay, so typically, why do we choose IV less than 50%? Because we want to actually buy it when the volatility is lower than half its usual time. Okay, so over here, of course, the lower the volatility, of course, if you were to buy below 40%, like 30%, 20%, 10%, you know that will be great because you're actually paying even less premiums, okay, for the volatility. Okay, and of course, there is also the concept of when you buy the call, there is a point where you need to sell it, off. Okay, so of course it will be ideal if let's say if I bought it at 41% volatility, it will be very ideal if let's say I sell it off when it's at a higher volatility, because this means that I'll be getting more premiums. Okay, and so this makes it very, very ideal for you to actually buy the call at as low a volatility as possible. Okay, so that when you sell it off, there is a higher chance that you're selling it off at a higher volatility. Okay, that's it. Okay, the main contributing factor, okay, to the option pricing is actually the stock price. Okay, so volatility is one part of the equation, but it's not the main equation. Okay, which is the reason why it is my last factor in entering. Okay, so over here, yes, 41% is a little bit high because looking at the implied volatility, there are times where you went even lower, right? Okay, but for me, okay, because if let's say I believe that the stock price will go up, okay, and then I'm willing to pay a certain premium for this volatility. Okay, so let's say I go ahead with it. Okay, so I go back to the analyzed trade. Okay, I go back to add the simulated trade. So okay, so okay, I enter when the stock is undervalued. To me, it is actually at fair value. It's at fair value because it came down to the 1 year 20 mark. Okay, I buy a call at -1 strike of the current price. I must make sure it's more than 365 days. Okay, so okay, can you tell me which contract should I choose? Okay, so I have contracts that end in 20 days. I have those that end in 48 days, 76, 167, 356, and 720. Okay, so I go for the furthest one, right? I go for the furthest one, 720 days. Okay, so let's click on this. Okay, then of course I will want to promise. Okay, sorry, not promise. I want to buy the right to buy, to own these stocks. Okay, at a price that is lower than the market price. Okay, so right now, let's just choose the one -1 strike of the current price. Okay, so -1 strike of the current price. Right now 121.52, right? Okay, so which strike price should I choose? Which strike price should I choose? Okay, I should choose 120. Okay, so once again, remember we are okay. So remember, select the buy call. So this is calls. Okay, 120. Okay, I scroll to the left. Okay, look for the cursor that says buy. Okay, so I click on buy call. Okay, as simple as that. Okay, so buy call. Okay, so for simplicity's sake, right now what we're going to do is we are going to actually compare two scenarios. Okay, can you see? I can actually choose to buy 100 shares. Okay, or I can choose to buy a call. I can choose to buy a call. Okay, so for both, in order for us to have a certain kind of comparison, okay, let's actually set a certain target price that we are intending, okay, that we think that TSM would go. Okay, so maybe looking at the charts, can you all just let me know what level do you think TSM would actually go to, okay, before we can consider to exit? Okay, what do you all type in the chat? Let me know. What level do you think TSM will go to before I can decide to close off this contract? Okay, 140. Okay, again, this is a little bit uncertain, right? Okay, so this is also where, okay, I did share with you that for Strategy X, we're going to go a little bit more advanced. Okay, so I know some of you have actually been asking about Bollinger Bands. This is something that we did share for PAX as well, and I'm going to introduce it right here. Okay, so what I'm going to do is indicators. Okay, I'm going to put in something called the Bollinger Band. Okay, you can type Bollinger and then Bollinger Bands. Okay, and you can actually, okay, for a start, right, if let's say you always do not know when to close a position, the Bollinger Band is actually quite a good indicator that you can use. Okay, so how does Bollinger Band work is that the Bollinger Band, right, okay, actually calculates for you the upper and lower price limit based on, okay, you can see 20 here, right, based on the 20 days moving average. Okay, so for the past 20 days, based on the variation in the stock price, okay, it has calculated for you that based on the calculations, okay, TSM is very likely, okay, to hit upper limit of $136 before it comes down, or it's very likely to go until the lowest $109 before it goes up. Okay, again, all of these indicators are based on certain assumptions. Okay, and the assumptions that the Bollinger Band has is this. It assumes that everything that is within 20 days. Okay, so the price points that are calculated is based on the 20 days, the past 20 days. Okay, so it's biased towards that. And the variations, the upper and lower limit is based on the stock movement for the past 20 days. So based on that, they calculate the variations at the upper and lower band. So you can see that when TSM's movement, price movement is not so volatile, you can see that the Bollinger Band, the width of it tends to be a bit stable. But recently, you can see that because TSM, okay, actually sort of went up very fast. Okay, so therefore this has opened up the upper and lower limit. Okay, so for those of you who have trouble assessing, okay, when to actually close your buy call positions, the upper, okay, this upper Bollinger Band will serve as a good gauge, because as you can see, right, typically the prices will actually hit the upper Bollinger Band and then it will retrace, come down. Okay, retrace and come down. So if I use this, okay, purely as my guide, can you all just help me to type in what is my target exit price? Can I type it in? If I use this to enter. Okay, so once again, some of you may ask me, hey, how often do I go and check back the Bollinger Bands? Remember, the Bollinger Bands uses the 20-day average. So every day it will change because it's on a daily basis. Okay, so what you can do is you can actually go and check every day lah, if you want lah. Okay. Kurtzman, yes, this is a very typical indicator used by market makers. Okay. So okay, so over here I set my exit price 136. All right, so let me just put this here. This is actually my exit price. If let's say I want to close the position. Okay, so let me just put here. Okay, exit. Okay, 136. Okay, so I want to exit at 136, and now let's go into this this chart. Okay, so let's do a certain comparison. Okay, so what I'm actually under analyze, and I want to look at the risk profile. Okay, so over here I'm going to be toggling between a few things, and I hope that you all can bear with me. Okay. Okay, so one other thing that you need to do if let's say you are going to Strategy X is very important for you to actually start having a trade journal. Okay, so let me just maybe remove some of these so that I don't confuse all of you. Okay, so let me just remove some of these existing positions. Okay, so I'm not comparing two, right? I have TSM. Okay, if I own the stock, there's no expiry date, correct? Okay, I can own 100 of it. Okay, my entry price is 121.52. 121.52. Okay, so you can see when you actually use this when you actually use this OMM trade journal, okay, you can key in your total portfolio size over here, okay, over here, and then it will actually calculate for you based on percentage what is the allocation. Okay, so you can see I've actually my total portfolio is 100K. Out of the current value, if I were to enter into TSM, is taking up 12.15% of my portfolio. Okay, so this is a very quick way for me to check, am I over allocated or not? Okay, okay, so over here my target price. Okay, so over here, my target price, I have allocated 136.03, right? So let me just put it in. Okay, 136.03. Okay, and let's say, okay, this is the closing price. That means the actual price when I close it. So let's say I close it at 136.03. You can see that my profit loss altogether is $1,451. Simply 136.03 minus 121.52 times 100, I will get $1,451. Okay, everyone okay? Okay. Wei Jie, you can you can configure to use 50 days, Wei Jie, but just be aware that most of the institutional people out there, they are using 20. Okay, so I often go back to what is their common setting, because I want to know what they're thinking also. Okay, yeah, okay. So this is if I own the stock. Okay, now let's go into strategy X. If I go into strategy X, what am I doing is actually I'm buying a call, right? Okay, so my expiry date, as you all have already mentioned, was January 2023 lah. January 2023. Let's see what's the date. January 2023, 20th January 2023. Okay, so 20th January 2023. My ticker symbol is TSM. My entry price, it's always good to calculate what's your entry price. Okay, so this is 122. Okay, 122. Okay, a quantity, I actually bought one. Okay, my strike price, let's see, I chose 120. 120. Okay, and how much premium did I pay per share? I paid $31 per share, for example. Okay, $31. Okay, so why is it that I want to note down my entry price? Is because is to be aware that my profits will only start when TSM goes above 122. Okay, so that I don't get confused with this 120. Okay, so basically your your profits only happen when the share price goes above, okay, your entry price. Okay, so what's my target price? My target price is 136.03. Okay, so closing price, this one, actually the closing price over here, I need to be recording my closing premiums lah. Okay, I put here closing premium. Okay, how do I estimate this? I can do this using the risk graph. Okay, so let me just show you. Okay, the risk graph over here. Okay, let me just show you. Okay, so right now, let's just analyze. Okay, we have analyzed. Let's just analyze the scenario of the 100 stocks first. Okay, this is more straightforward. Okay, so when I buy 100 stocks, you can see that on the x-axis over here, this is the share price of TSM. Okay, if you want to see more of the share price, what you can do is you can click here and you can drag to the left. Then you can see more share prices. Okay, okay. So on the left here, this is my profit loss. Okay. So you can see very clearly TSM, okay? When I buy the stock at 121.52, okay, where is my break even? My break even, of course, will be at 121.52, right? So when the stock price doesn't move, 121.42, I incur zero loss, zero gains. 121. Okay, I'm trying as best as possible to click. Okay, zero loss, zero gains. Okay, and as long as the stock price goes above, okay, to above 121.52, I will start to gain. Okay. Again, I want to find out what's my target closing price is 136.03. So let's go there, 136.03. Okay, around here. Okay, so what is my profit? You can see the numbers over there, 1453.17. Okay, 1453.17. Okay, which is actually around here lah, 1453.17. Okay, so this is more straightforward. Okay, the one that is a little bit more confusing is when you actually analyze the buy call. Okay. Analyze the buy call. Okay, so now you see a pink line and a blue line, a pink line and a blue line. Okay, so can all of you type in the date of the pink line. Can you all see? There's a date there. So it is, this pink line represents the value of this buy call contract, okay, on 31st of January 2021. Okay, so can you all type it in? 31st January 2021. Okay, now the other one over here, this one over here, the blue one, this one, okay, is the value of the contract, okay, on 21st January 2023. Okay, so when is this blue line? Okay, this blue line, okay, can you all type in, is the expiry. Can you all type in expiry? Expiry. Okay, I know some people are a bit lost already, so stay with me. Okay, okay, expiry. Okay, good. Okay, so now pink line is if is the contract value today. Blue line is the contract value on the day of expiry. Okay, now I want to look at the break-even prices for both of it. Okay, so look at this. Now pink line, when do I break even? Okay, you can see I break even when, as long as TSM, okay, goes above 121.65. And you realize that this is very, very close to the entry price, the current entry price. Okay, okay, so basically, as long as TSM stock price goes above 121.68, you can see in white, you can see these are pure profits, the 109, 150, okay, all these are pure profits. My pure profits will keep increasing and increasing and increasing, okay? Okay, increasing until it comes to a point of, which is my target point, right? 130.03, okay? Okay, can you see? Okay, can you all tell me what is my potential profit if TSM goes up to 130.03? Can you all type it in? Can you all see the numbers? Okay, 530.66, right? Okay, so what I can do here is I can actually put in my closing premium. Very possibly is going to be this, okay? This plus is going to be net 530.33 lah. Okay, so my profit loss, I can just put it in here. 530.33. This is my entire profit. Okay, and at that point in time, the premium per share would be this plus this. So this one, if I reduce, it's $5.30 lah per thing. So over here, I should be expecting $5.30 plus 31. It should be $36.50 and 30 cents at that point in time. Okay, so what I want to know is my profit and loss. Okay, and this is for 3% of the portfolio. Okay, so just stay with me first. I just go through this entire thing first. Okay, now you can see that there are some that there are many benefits to closing the contract early. Now, if I were to wait until expiry date to close, okay, can you all type it in? What would be my break-even price? Okay, okay. If I were to wait until expiry date to close up, TSM has to actually go all the way up to 151 in order for me to break even. Okay, yeah, it takes a long time. Okay, so okay, this in essence is saying that, okay, what is the cost of it? Okay, you see, if I had closed it beforehand, can you see the white numbers appearing? 1981.48, right? If I had closed the contract beforehand, I could have secured $1,981, okay, if I had closed it beforehand. But if I went to expiry, all this will come down to zero. This means, guys, okay, can you tell me, can you type for me, what is the time value of this contract? What is the time value of this contract? Let's see whether you are sticking with me or not. Yes, you're right, okay. The time value of this contract simply is 1981.48. You are paying a time value of $1,981 for this contract. Okay, so the longer you take to close it, okay, the more profits you will actually lose, okay, because you're actually paying for the time decay. Okay, so one thing that we need to be conscious of also is actually how much profits are we losing every time we do not close the contract. Okay, so this one I hope gives you a certain perspective that if you wait too long to close, you're actually going to be losing quite a lot of profits. Okay, does it make sense so far? If it makes sense, can you type yes? Okay, so okay, if this is okay, I'm going to actually go into even more advanced stuff. All right, okay, so now we all understand, okay, that if let's say TSM were to go to 130, Okay, if we were to go to 130.03, which is our target price, right? Okay, over here, okay, we would earn $532.65. Okay, but provided what is the date here? Provided that TSM moves up to $103 by today. Okay, do you all think it's possible? Do you all think it's possible? Okay, for TSM to move up to $136.03 by today. What do you all think? It's not possible, right? Okay. So in doing our trade journal, we also need to be very conscious. Okay, how long actually this will take? Okay, so we go back to the charts. Go back to the charts. Okay, and maybe why don't you all based on the charts, right? Okay, let's take a look at the charts, and we can actually sort of assess how long it will take to hit the top lah. Okay, so we can see over here. Can you see over here? This is December. 136, my bad. 136. Thanks for telling me. 136.03. Thanks. Okay, I think I have it. Okay, which means our potential profit is 0.03. Okay, let me just try to make it as accurate as possible. 0.3. I almost got it. 0.3. Okay, 0.6 lah. 0.6. Okay, let's accept that lah. 929.30. Okay, so let me just put it inside first. Okay, 929 point. 929 point. Okay, 930 lah. 930 lah. Okay, 930. Okay. Okay, which means that the closing premium will be $31 plus 9.30. So by then my closing premium would be around 9.30. Okay, 40.30. Okay, this will be my closing premium. Okay, so of course we have to be realistic. TSM is not going to go up to 136 by today lah. Okay, so what can we do? We can actually sort of gauge how long it will take to go to that price. Okay, so let's take the previous range, for example. You can see that TSM actually retraced over here, right, in December. Okay, can you all see? 24th December 2020. Okay, so if it goes up until here, how long did it take? Can you all let me know? Over here, it was 20th December, and after that, 21st January, okay, it went up. Okay, so how long did it take for it to actually go up to the upper Bollinger Band? Can you let me know? Around 30 days, right? Around 30 days. Okay. So then what we can do is we can then adjust. Okay, we can actually again this is a bit advanced. If you need to see the recording, go and look at the recording. Okay. Okay, what we can do is we can adjust this date over here to reflect the option pricing if we were to close 1 month later. 1 month later. Okay. So let me just click on this. So I click on this date. What I do is I go forward. Okay. Let's say it takes 1 month to reach my expected target. So I click over here. Right now, can you see the date has changed? Okay, and when the date has changed, you can see that my break-even price has also gone up. Okay, initially my break-even price was around 1 to 1. It has now gone up to 1 to 2. Okay, and why? This is because time decay has already taken place. Okay, and so for this, if I wait until 1 month, okay, so realistically TSM will actually only go up in 1 month's time. So what is the profits that I'll get there? You can see it's no longer 900 something, right? It is now 877.84. Okay, so can you all do me a favor and help me to type in this value, 877.84? Okay, so that later on I can refer to it. Okay, so if TSM goes up, to my target price of 136.06, okay, in 1 month's time, according to the charts, okay, my profit is 877.84. Okay, can okay, so let me just go back in. Okay, so this is when I need to make certain adjustments. Okay, so over here under reasons, okay, what I will put in is that TSM go up to 136.03 in 1 month. This is my assumption. Okay, based on this assumption, thanks for helping me to type it in. Okay, my profit loss, would actually be 877.84 based on this assumption. Okay, and which means my closing premium at this point in time will be 30. Okay, this is 8.77. Okay, if I divide by 100, 8.77 plus this will be my closing premium will actually be $39.77. Okay, so this is actually how you can actually take note of these things using a trade journal. And also this is how you can make a judgment for yourself. Is it actually better for me to buy stocks or actually buy the call? Okay, so let's compare. Now for buying of the, okay, let's go back to our, okay, so we can do two things. We can buy stocks, 100 TSM stocks, or we can buy the call. Okay, if we buy stocks, our commitment is going to be 12% of my portfolio. If I buy call, it's only 3%. Okay, profit loss wise, okay, my profits will be more if let's say I own the stocks. Okay, but my profit will be less if I own the call. Okay, but because this profits is based on a $12,000 capital, the percentage profit loss is only 11%. For this, because it's based on the $3,000+ capital, okay, my profit loss is a lot higher. Okay, going by this, how many of you would prefer to, let me know what you prefer. Do you prefer to buy 100 stocks, or do you prefer to do strategy X? Let me know. Okay, let me know. Okay, yeah. Okay, very good, very good. Okay, so most of you actually do strategy X. Okay, and one very cool thing about this is that when you do strategy X, it actually takes up less of your portfolio. So even if, let's say, the share price goes down, you were wrong in your thesis and all that, okay, this is only a very small part of your portfolio. Okay, so the level up that I wanted you to have from this foundation course is I wanted you to actually be able to record your trades, okay, accurately, okay, based on the risk graph. Okay, and if you found that useful, okay, can you type risk graph? Okay, and I will show you one more thing, okay, before I give all of you a break, and then for you to massage your head and all that, okay, and then we will actually go into your homework review and the bonus stock analysis. Okay, now some of you may be wondering, hey, actually I bought a call some time ago, but I didn't really take note of like what was the premium that I paid and all this kind of thing. So how can I assess? Okay, so one other thing that I wanted to share with you is this. Okay, so for example, you can see that right now I actually, can you see I have a BAC position? Okay, and I'm way overdue. I'm supposed to close it, but I have not closed it. Okay, way overdue. Okay, I've not closed it. Okay, so what can happen is right now I want to assess what was my break-even price back then when I bought this call. Okay, so what I can do is I can go back to the analyze tab. Okay, then I can type on BAC. Okay, BAC. Okay, and you can see that whatever I did previously, like the 100 shares that I bought, okay, the long-term calls that I bought actually is all right here. So I can actually untick them. Okay, so for example, for this call, I actually am able to see, okay, if the pink line again, it reverses today. If I were to close, okay, right now, okay, if I actually look at this contract right now, my break-even price, because of the time decay that has happened, even though the strike price is 25, right? Okay, can you type it in? What is actually my break-even price right now for this BAC contract? Can you type it in? Okay, it's actually 29.37. Okay, so that is actually the severity when you don't close. So I need to ask myself, hey, okay, do I think that a BAC still has room to grow, okay, beyond this 29.37? Okay, so going back to BAC charts, let's take a look at BAC charts. Okay, BAC charts. Let me just remove all these drawings. Okay, right. Okay, so what do you think I should do with my BAC contract? Now this is my break-even price right here. Okay, what do you all think I should do with my BAC contract? I have 43 days left. So what do you all think? Okay, right. Okay, yes, close. Okay, so close. Okay, so some of you who are not sure what is your break-even price from the strategy X and all that, you can use your risk graph, go and take a look, and then go and see whether does it make sense for me to even wait? Because the more I wait, the more I will actually lose. Okay, so I answer one last question, okay, before I actually send you off for a break. And anyway, don't worry, the group coaching call is there for a reason. Okay, so we go through these things during the foundation course, and then you take some time to try out, and then during the group coaching call, we can then answer deeper questions. Okay, yep. Okay, Joanne, again, I would invite you to go back to your risk graph, okay, because only you know, only your system will actually contain the information. I'm not able to say. Okay, so you go into the analyze function, go and type in the ticker symbol of the one that you want to look at, go and look at the risk graph, go and find out what's the break-even price. If it doesn't make sense anymore, just close it. Okay, Kelvin, okay, I will send this OMM journal into the respective Facebook groups. Okay. Okay. I think just now someone actually asked about the difference between strike price and exit price. Okay. Actually, what is more important here is actually your exit price. Okay. Okay. This strike price, you realize, right? Okay. What's more important actually is your exit price, because okay, the strike price is the price that you were willing to actually that you were actually buying, okay, to own 100 stocks for. Okay. But because typically when we buy a call, we are not really looking to exercise the contract. Okay. We are looking to actually close it, okay, once the share price actually goes up to our exit price. So it's therefore important for you to have an exit price, okay, and then lock in what is your target exit price and what is the kind of profits that you're expected to get, and then stay disciplined to that. Okay, I hope that answers the question. Okay, let me see whether Joe is here. Joe, are you there, Joe?
Yep, I'm here.
Okay. Yeah, sorry, Joe, I actually took longer than expected. Okay.
It's okay.
Yeah. Okay. So right now, we have actually covered. Okay, wait out. Wesley, how do you find the premium of the exit price? Okay, Wesley, I think you came in late just now. So you can actually watch this recording. But one more time, you can see that when I actually adjust this date to the date that I expect, okay, for the price to move up, then I move over my cursor to the expected exit price, I can actually see the profits there. Okay, once again, for those of you who missed this, but I must say that I did go through certain advanced stuff in this foundation course. You can actually go and check the recording. All right. Okay, Joe, we are actually a bit late. We are supposed to actually go through the fried steak homework and your bonus stock analysis, right? Yeah, okay. How long a break do you want to give them?
Maybe shall we go for a 5-minute break? Then later, I think then the stock analysis will go first. Then after that, I will end off with the Q&A lah.
Okay, great. Okay, everybody okay with 5-minute break? All right. Yes.
So,
okay, great.
Yuva, I don't think IB has this kind of feature lah.
Yeah.
Only
Okay,
thing Swim have.
Yeah, Yuva. So this is the reason why, right? In addition to IB, I always enter the trades on the paper account of TOS also, so that I can retrieve all this information. Okay. Hey, thanks for reminding me to talk about that. Okay, great. Okay, 5 minutes break. I'm going to start the timer right now. Let me just set it. Right. Yeah. Hey, Yuva, it's okay. You can always start doing that from now on, okay? Right. Okay. I've started the 5-minute timer. Okay, so let's go for the break. I will also pause the recording, and I will see all of you back here in 5 minutes time.